Hello and welcome to today's live technical analysis session. We're going to be starting off as usual with the euro against the US dollar. As you can see, the pair has currently broken below our S1 level at 1.1040 and appears to be moving in a downwards trajectory. Having broken the upwards moving trend line, in addition to breaking below our S1 level, the RSI is also at 50, but I would not be surprised to see it moving lower than 50. Overall, it does appear that the euro against the US dollar, at least on the daily chart, does appear to be moving in a downwards fashion. The target for the bears might be our S2 level at 1.0940. Lower than that, we have our now S2 level at 1.0775. And then we're going to be needing another support line for S3. When looking at the chart, I can see that this may have been a significant support level upon which the pair continued and moved higher, even broke a prior high, retraced lower, and then continued on its ascent. As such, I would be placing my S3 level at roughly at 1.06636, but I will be adding a text label to make that a bit clearer for you at home. In terms of resistance, we could maintain the resistance levels that were placed yesterday. However, with the new price action, I will be readjusting the the resistance level at R1. Moving that, I will be placing instead 1.10717 as my R1 level. I will be opting for an R2 level at this prior high here, and then I will be readjusting the R3 level as well. So looking back, we have R1, R2. Just look at the support levels. So we have this is R1. Uh, this is, I would say, as R2. I have S1 and S2. The difference between S1 and S2 is much greater than that of R1 and R2. Such we could potentially find a support level that is a bit closer to the price action, or at least our S1 level. Let's see if we can find something. I place that as S1 and I'd opt for this as S1 instead. S2 and S3, R1, R2, and then I need to find R3. Essentially, my resistance levels and support levels are a bit closer because I have a different point of view, which is more than fair. I'm taking this wick here, upon which it found some support, but then the bulls failed to maintain that momentum. As you can see, the bears continued on their descent, broke below this support level, and moved lower, forming a new R2. So resistance, and then again resistance. So these would be my support and resistance levels. I would be placing S1 at 1.0970. So that would be RS1, and I will be adjusting that text label as well. We are on the daily chart as well, so that is worth noting. This is more of a macro outlook for the euro against the US dollar. For S2, we would be placing that at 1.0880. That would be my S2. And then S3 at 1.0775. So these are our support text labels. So you can see to the right hand of our MT4 platform, we have the support levels, and now we will be readjusting the resistance levels. In terms of financial releases, for today I would be highlighting the ISM and S&P manufacturing PMI figures for August. The markets do appear to be placing a greater emphasis on the ISM PMI figure, but personally I would also like to look at the S&P one, because for the S&P manufacturing figure, the economists are expecting it to deteriorate even further. For the ISM, they're expecting it to improve. But when looking at both indicators of the US manufacturing sector of the US economy imply that it still remains within contraction territory. As such, even if the ISM figure comes in as expected, it may not significantly support the greenback as it still remains within contraction territory. However, in the event that it exceeds expectations, so the S&P and the ISM manufacturing PMI figures come in both higher than expected, then we could potentially see a significant support of the US dollar, as it might imply that the US manufacturing sector is rebounding and could be improving. So, reducing that contraction. That is my R2 level. As you can see at 1.1180. For R3, I would be placing it at 1.1280. So I'm just rounding that up. In terms of other financial releases for the week, we have the BOC's interest rate decision tomorrow. And then, of course, we have the US employment data. And if you excuse me, 1.280, not 1.1, 1.280. So I'm not guessing, I'm assuming that the highlight of the day is the ISM PMI figures. For tomorrow, we have Australia's GDP rate, if I'm not mistaken. But from a technical point of view, Euro USD does appear to be moving in downwards fashion. The next support and target for the bears could be the 1.0970. Lower than that, we have 1.0880. S3 at 1.0775. Now, in the chance that it does move higher, the target for the bulls would be at 1.1070, R2 at 1.1180, R3 at 1.1280. But look at the price action and look at the daily chart. This candle in particular, it has broken below the mid range of the Bollinger Bands. So my first scenario is a bearish outlook for the pair, taking in for S1. If it fails to break below S1, then I might consider a sideways bias between S1 and R1. But for now, I would maintain a bearish outlook for the euro against the US dollar. Looking at the US dollar against the JPY, a different story appears to be emerging. In particular, we can see that the JPY is strengthening against the US dollar. Now, these were support and resistance lines that were placed. S2 and S3 remain intact. S1 now appears to have been invalidated. So I'm going to be readjusting slightly this S1, reflecting these two daily candles, and it will be acting as our new resistance level at R1. R1 is now at 146.85. So this would be my R1. My R2 will be the old R1, and so on. So let's just change this. This becomes R1. R2 is at 149.35. R3 is at 151.95. Now, for the US dollar against the JPY, some of you may have noticed that the RSI indicator below our chart is currently registering a figure near 40, which does imply a bearish market sentiment. But if you look at the Bollinger Bands, which do appear to be flattening out, and the pair having broken above the mid range of the Bollinger Bands, even temporarily, for me would not be essentially a bearish outlook, but rather a sideways bias between S1 and R1. So if it stays confined between 143.45 and 146.85, we would maintain that sideways bias. In the event that it does break above R1, as we do have an upwards moving trend line which has yet to be violated, then we could we could opt for a bullish outlook with the next potential target for the bulls being the 149.35 resistance ceiling. If it does break below the downward swing trend line, still we would maintain that sideways bias we mentioned because it has not broken below our new S1. If it does manage to break below S1, then we would maintain a bearish outlook. Now this will become S2, and I am now hunting for my S3 support line. We're going back in time and we're looking at July 2023. Now, I have two options here. As you can see, a swing low, then a higher low. But this is too close to my S2. As you can see from the line that I'm about to place, it's very close to my S2 line. This is actually very nice. It is approximately $2, but perhaps placing this old high validated by these two wicks. might be slightly better in terms of a support level. That being said, though, I am considering placing my S3 line at these two candles, which is validated by the SWIG. So I'm going to be placing the other potential support level. Let's change this color. So for the sake of the argument, this is going to be aqua in terms of color, and this is going to be red. Now, this could be a support line, but taking the more recent price action, you can see a heavy buying pressure here in terms of the closing of the bearish and the opening of this bullish candle here, validated by the SWIG, and then another testing that this indeed is support. So we'll be ignoring 137.42 and instead opting for 137.98 as my S3 support line, albeit is a bit too close to S2, but still for me would be a more significant and valid support level. So this becomes S3, this becomes S2, this becomes S1. We will also be looking today more on European equities, so we will be looking a bit at Rolls Royce as well. If you haven't heard already, there have been issues with Airbus's plane. If I'm not mistaken, the A350. So Cathay Pacific has been grounding those flights as they have discovered a leak. If I'm not mistaken, Bloomberg was quoting the pipe that feeds oil into the engine, so fuel. That is a bit of an issue, but that is not Airbus's fault. Instead, it appears to be Rolls Royce's fault, which is why it might be impacting the company's stock price. We will also look at Volkswagen, which yesterday announced that it is considering closing down some of its plants in Germany, which would be the first time in history, so in the history of Volkswagen, that such a closing might have occurred. So they have never closed down their plants in Germany, and that possibility, if it does materialize, would be a first for the company. It appears that it is due to cost cutting measures, but if we are also considering that the Volkswagen employees belong to the strongest and largest union, so labor union in Europe, potential strikes and litigations could significantly weigh on Volkswagen's stock price. So even though they're reducing their costs, I would personally maintain a bearish outlook for the company's stock price until this matter is resolved. So this was the USD against the JPY in terms of technicals. For the British pound, we can keep our support and resistance levels. Note this was support, turned to resistance, still validated, failed to break above, gathered sell orders, and is now on its way down to 1.3040. Lower than that, we have S2 at 1.2890. Then you have S3 at 1.2675. And then USD CAD. Let's see for the pound, maintaining a bearish outlook. RSI 59. So the bullish sentiment is still there, but if you look at the price action, it paints a different story. Would be bearish down to S1. Oil sideways bias between 71.40 and 78.75. What is a bit concerning is that we are seeing lower highs. This for me would be a bearish triangle. You can see lower highs. Will not be surprised to see it bouncing off S1 and around two-thirds of this triangle, seeing a break below S1, taking aim for S2 at 67.90. So I am bearish on crude oil. For gold, it does appear to be moving in a sideways fashion between 2,470 and 2,530 on the daily chart, has broken below our upwards trend line. RSI closing in on 50, which does imply a neutral market sentiment, so sideways between S1 and R1. Intel stock price, massive gap below, does appear to be moving slightly in an upwards fashion, might be recouping some of those losses. That story remains to be seen. I am slightly bullish for Microsoft stock price. Have the on balance volume below our chart. Their size at 48, close to 50. But if we see a break, let's see something here. If the price action manages to if the company's stock price manages to break above $425 per share, I would opt for a bullish outlook on Microsoft. ExxonMobil maintaining that sideways bias between 113.13 and 119.53. Euro against the Aussie, the Nasdaq, FTSE 100. But as we said, we are going to be looking at two particular companies today, and that will be Volkswagen and also Rolls Royce. So Rolls Royce for the engines in the Airbus, and Volkswagen for the announcement that they are considering closing down some of their plants in Germany. So those are two key stories that I would expect to take over the news, at least for the rest of the day. And now, essentially, if you want to see the stocks that we are offering on our MT4 platform, it is Control M on your keyboards, right click show all, and then we're moving down and we are looking for Volkswagen, European, that is one, and we are also looking for Rolls Royce. So we have LVMH, so Louis Vuitton, Deutsche Bank and Deutsche Post, Venver, so Siemens, Lufthansa, Rolls Royce should be around here. There we go. Nope. Symbols. So we're going to be doing Rolls Royce and Volkswagen today. So Rolls Royce, let's add our template. So in our template, we have the moving averages, 100 and 200 moving average. We also have the Bollinger Bands, which are on a time period of 20. We also have the RSI indicator. I will be adding today also the on balance volume for Rolls Royce and for Volkswagen. So you can see on balance volume, just send this a bit darker so it's easier for us to see. So the on balance volume helps us determine the predominant strength of a trend and essentially sees the volume entering that is being traded on the particular company's stock price. So we did have a crossover, so death cross, so bearish signal. So the 100 moving average, so the 200 moving average crossing below the moving average. That is a bearish signal. So this for me would be a retracement. Looking at the 4 hour, it's gapped up. Still think this is simply a retracement and could continue moving in a downwards fashion. We're looking at the 15-minute chart. RSI is at 50. Would not be surprised to see it moving down to 461.18. But let's go back to the 4 hour chart. So this is Rolls Royce. The fundamentals are bad for the company. So if more and more planes are being grounded because of issues resulting from the engines that were manufactured from Rolls Royce, it could further weigh on the company's stock price. The issue is that it wasn't found on only one plane, it was found on numerous planes operated by Cathay Pacific. As such, if it was simply one, we could chalk it off to a particular error or simply a one time off. But the fact that they're grounding flights and they're seeing it on more planes tends to make me believe that this is more of a widespread issue. And over the coming week, we may see more and more European airlines which are operating the Airbus particular plane, either forcing them back into maintenance and checking for the particular issue that Cathay found in their planes. For me, R1 would be at 486.30. So this would be my R1. This acted as support. When it broke below, has now turned to resistance, so that is my R1. R2 is at the high here. Selling pressure moved lower, 503.20. For S1, 461.80. I will be readjusting this in just a moment. So we've left about $7. So we're looking at something at $453 per share for Rolls Royce for our next support level, if it coincides with the price action. This for me would be a support level, 435.95. That is my S2. And then for S3, I'm seeing buying pressure here, wick down low, found buyers here, but came back down and tested. So I will be placing S3 at 417.40. And then for resistance at R3, don't have that data. So simply guessing and estimating based on the difference between R1 and R2, which is $7. 510 would be a nice benchmark. It is also a round figure. There is a psychological impact around these large numbers, which institutional investors may be using as well. It is not $10. It is 14, it is 17. So 520. Bit of an error on my part. So 520, we have R1, R2, R3, S1, S2, and S3. Overall, I would be maintaining a bearish outlook for the company's stock price for the reasons that we've mentioned before. And now we need to add the text labels here so that it's easier for you to follow at home. 461.80, that is my S1. S2, as we've discussed, 435.95. 435.95. That would be my S2 support line. And then for S3, 417.40. Then for R1, 486.30. Then for R2, 503.20. And then for R3, as we've discussed and said together, 520. Although that R3 might be a bit too ambitious. Still, we'll be placing it, and whether we are right or wrong, only time will tell. So that is R1, R2, R3, S1, S2, and S3. And we also said we're going to be having a look at Volkswagen as well. So templates, the one that we're using as well. So yesterday, the company stock price was essentially this bullish candle here. It was moving in an upwards fashion. And then the news broke that the company is considering to close its plants in Germany. Well, not all of them, but some of them. The main issue is the potential strikes from labor unions. And if you're closing down plants in Germany, the question is, how bad is it that you're considering closing plants down in Germany? If it was India, China, or another country, I would gloss over it and would say, yes, cost cutting measures, the company's fine, they're reducing their costs, and we're okay. But these are plants in Germany, the first time in Volkswagen's history that they are considering to close them down. For me, implies that there may be more issues brewing under the surface for the company. And as such, I would maintain a bearish outlook on Volkswagen's stock price. For R1, 98.52. For S1, I'm taking this price action here. I'm ignoring this wick. Note heavy buying pressure, 95.58 for S1, 92.33 for that S2 support line. And look, validated twice and a third time by these wicks. And if we come back here, valid as well. That is for S1, not S2 and S3. Sorry, excuse me, that is R1. Apologies. So support turned to resistance. If we go further back, we have nothing. We don't have that data in our chart currently. So let's place the resistance levels and then we can figure out what R3 would be. So 98.50, so rounding that up. For R2, I am looking at this price action here. Let me add a rectangle so that you can see. I'm looking somewhere around here. So there was price action here. I'm trying to see if there was a level upon which we saw either significant buying pressure, which once broken moved lower. And this looks to be it. Look down, found support, then acted as a resistance, about $3. Same distance between the S1 and S2 support line. So that's even better. This would be my R2 line. And then taking this high here as my R3. For my S3 level, so if we round it up, let's say that's 95.60, $3.50. 89.50 could potentially be our S3 support line, 89.50 for that S3. And now we need to add those text labels. The technicals for Volkswagen indicate a sideways bias, narrowing of the Bollinger Bands. The RSI is at 56. It is close to 60. But look at the chart. It's moving lower. So I wouldn't be surprised if the next 4-hour candle touches on S1 and this actually goes even closer to 50. So from a technical point of view, it appears to be moving in a relatively sideways bias. But if you add in the fundamentals and the possibility of the labor unions in Germany striking against Volkswagen, I would maintain a bearish outlook. But if we're speaking purely from the technicals, I would be maintaining a sideways bias as long as it fails to break below that S1 support level. At this point in time, I don't really see a bullish outlook for the company stock price. Fundamentals and technicals tend to support that, and I am simply adding the R3 line in terms of a text label now. So technicals sideways bias between S1 and R1. Fundamentals bearish outlook for the company stock price, and if it does break below that 95.58 support line, I would continue and would maintain that bearish outlook down up until that S3 level. Once again, it would have to break that S2 to reach that S3 support line. Now, in the event that we are wrong and it does manage to break above R1, so if the cost cutting measures that the company is attempting to do with the potential closing of those factories, because as a reminder, nothing is certain. So if they reverse course, so if they decide not to close them down, then we might see the company stock price moving higher. But if they do, and it is significantly reduces those costs and it can be justified to investors, then maybe, and that is a very long shot, it might support the company stock price. But the cost cutting measures would have to be significant in nature. Otherwise, I don't see a bullish outlook for the company stock price with the information that we currently have. 96.30, not 25. So, as a small recap, main event of this week will be the US employment data on Friday. For today, we've got the ISM manufacturing PMI figure and the S&P manufacturing PMI figure for August. In terms of equities, we will be most likely going to be hearing about Volkswagen, Airbus, and Rolls-Royce for the remainder of the day. We've discussed from a technical point of view Volkswagen and Rolls-Royce. We've also looked at FX pairs. We've skimmed over Microsoft. We've looked also at ExxonMobil. We've looked slightly at gold. We haven't really adjusted those support and resistance levels, but we have gone over them. Tomorrow, we're probably going to be discussing the BOC's interest rate decision. So heavy focus tomorrow on the loonie. We're going to be looking at oil as well, given that Canada is an oil exporting nation. That pair might also be affected from oil. But overall, main event for tomorrow will be the BOC's interest rate decision, and then on Friday, the US employment data. And with that, I think we are done for today. For the rest of the week, the technical analysis sessions will be done with me. So I will see you all tomorrow and have a nice day.
In progress. Okay, hi everyone, welcome to today's webinar. So for today's session, we are going to be talking about price action. We're going to give about 1 more minute to let more people join the session before we get started. So in the meantime, let me know in the chat if you guys can see me and hear me, and can see my slides as well. And then we'll begin in about 1 more minute. Thanks, everyone. Okay, let's go ahead and get started. So, as per usual, a risk warning and disclaimer, our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risks involved. The information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. So I'm Melanie, and I'll be your speaker for today. I'm an investment analyst from Rocket, who were finalists for Best FX and Equity Research in the years 2019 to 2021. Okay, so here's our agenda for today. We're going to start off by talking about the anatomy of a candlestick, some price action trading approaches, and then we'll look at the different candlestick patterns. And then lastly, we'll combine candlestick patterns with what we already know, such as your support and resistance, your Ichimoku, and some other indicators as well. If you guys have any questions throughout the webinar, feel free to let me know in the chat, and I'll try my best to answer all of them. Okay, let's go ahead and get started with the anatomy of a candlestick. So here's we have a bullish and a bearish candlestick. On the left, we have, so basically the tip of the bullish candle is the high price, and the close price starts when at the start of the body of the candlestick. If we look at the lower wick, the open price starts at the bottom of the body and ends at the lower price, which is at the end of our candlestick. So obviously the opposite is true for our bearish candle. Your high price would be at the top of your upper wick. Open price would be at the start of the body of the candlestick. Close price at the end of the body of the candlestick. Low price would then be at the bottom of your lower wick. So here's our price action trading approach. Okay, we have the reversal and the breakout. So here's an example. We have price moving within a ascending trend channel. Okay, and we have what's called a morning star formation right at the tip of our at the lower band of our ascending trend channel. Okay, so when this morning star formation starts, we are expecting a reversal to continue within the ascending trend channel. You can see that's exactly what happened here. Okay. Next, let's look at the breakout. So we have this area here, this resistance area, which is with one swing high, swing lows, and a couple of swing highs. So basically, when there are bulls and bears that respect that area, or there are swing lows and swing highs that respect that area, it's basically called an overlap level. And this is a very strong resistance area where we are expecting price to break through. Okay, and you can see exactly that's what happened here as well. Okay, and how do we know that price is going to break through? Basically from, again, the formation of your candlesticks. Here we have what's called the three white soldiers. So there are many formations of candlesticks out there. So if you just Google, there will be many templates that you can take a look at. So you don't really have to remember off the top of your head the different shapes or formations of these candlesticks. Just as long as you are comfortable using a couple of them, you can always refer to Google for any templates or any guidelines on the different shapes for candlesticks. Okay. Okay, so moving on, we can see after this three white soldiers, price broke out really strongly and rose above our resistance area. Okay, so before we get started and we dive into the different candlestick patterns, this is basically what price action is. So it's basically the movement of a security's price. In this case, would be Forex, plotted over time. So that's why we are looking at specific candlestick patterns or which tell us the price movements without relying on the different indicators or even algorithms. So it's all about understanding the market's natural behavior. Okay. And then we'll show you at the end how to combine these natural market's natural behavior, which is then our price action, how we combine that with our indicators so that we get a greater understanding of the direction of price. Okay, so let's get started. So we're going to start off with the three single candlestick patterns. We have the hammer and the hanging man, which are just opposite of each other. Okay, secondly, we have the inverted hammer and the shooting star. Again, these are just the opposite of each other. You can see the difference in the shapes. So the upper wick would be a lot smaller on a bullish or a hammer. And your lower wick would be a lot longer, whereas for your hanging man, we're looking at a bearish candlestick, but looking at the same shape. So again, this is a bullish candlestick, this is a bearish candlestick. If we look at an inverted hammer and a shooting star, again, you see the shape of the candlesticks are exactly the same. Here, we don't really have a lower wick that we're looking at, which is mainly the body of the candlestick as well as the upper wick. So for both of these, this is a bullish candlestick, that's why it's green, and a bearish candlestick, but exactly the same pattern. Okay, and next we have the dragonfly doji and the greystone doji. Okay, so again, we can see price moving um or rather these candlestick patterns are exactly the same. It's just that in this case, we are looking at a bullish candlestick pattern, and over here we're looking at a bearish candlestick pattern. Okay, next let's look at the top two double candlestick patterns. Okay, so here we have bullish engulfing and bearish engulfing. So again, like we mentioned earlier, we have the exact kind of same pattern, just that one is moving upwards and one is moving downwards, since it is bearish. Okay. Okay, so let's move on. Here we have the second double candlestick pattern. So for this one, we are looking at tweezer bottoms and tweezer tops. Again, the candlestick patterns are exactly the same. And it's just that we are looking at the price looking at a reversal from down to an up trend, and on our tweezer tops we're looking at a reversal from the uptrend to a downtrend. Okay, next we're looking at our top three triple candlestick patterns. Here we have our morning star and evening star. So our morning star is kind of a signal that price is going to reverse again, similar to our engulfing pattern. If I go back, rather similar to our tweezer bottoms, you can see when we are able to spot a morning star, price is reversing in its trend. Evening star, similarly, it's also reversing in its trend but giving us a bearish direction instead. Okay, so for the morning star, it's typically occurs at the end of a downtrend. That's why we say it's a reversal. So the first candle, which is this red one, it's a long bearish candle, which indicates a strong downtrend. Okay, whereas our second candle tends to be a smaller shape, can be bullish or bearish actually, that gapes down and it shows indecision in the market. So this can be your doji or even a spinning top that we talked about earlier. Then your third candle, which is this green one here, would be a long bullish candle that closes well into the body of the first candle, signaling a reversal. So the pattern is actually more reliable when this third candle here, when it closes above the midpoint of the first candle. So you can see the midpoint will be somewhere around here. So if it closes somewhere around here, that's a good sign that price is going to continue in the uptrend. Okay, so obviously the opposite is true. For an evening star, we have a long bullish candle here, indicating a strong uptrend. Then we have that same doji candlestick here, showing indecision in the market. And then the last candlestick is basically a long bearish candlestick that closes well into the body of the first candlestick, which we see the same thing happening here. Okay, let's move on. Okay, so next we have the three inside up and inside down. Here we have a opening candle, which is a bearish candlestick, and followed by a green bullish candlestick, which is much smaller. And the opposite is true for a three inside down. Okay, so again, these are indicators of potential market reversals. That's why for our inside up, we can see a downtrend reversing up into an uptrend. For our three inside down, we see an uptrend turning into a downtrend. So for three inside up, we would see a first candle giving us a long bearish candle, indicating a strong downtrend, and then followed by a smaller bullish candle that is completely contained within the body of that first candlestick. That's why you see it completely within this area here. Third candle would be a long bullish candle that closes above the high of the first. Okay, so that confirms your reversal into an uptrend. Okay, opposite is true again for your three inside down. So starting off, we have a long bullish candle, which indicates an uptrend, strong uptrend, and a smaller bearish candle here that's completely contained within the body again, confirming. And then lastly, the long bearish candle closing below the first candle, confirming the reversal. Okay, we have a question here. What time frame do you see good setup for signal? Okay, so the time frames that we normally would use for these candlestick patterns is completely up to you actually. Um, we just normally like to do our analysis on swing trading. So that will be like your medium term trading, we're looking at 4 hour to your daily charts. You can also go down to your shorter term trading if you are a day trader, or your intraday trading, which would be about 30 minutes to 1 hour. We typically won't recommend you to go below 15 minutes just because it tends to get a little bit too noisy on those shorter time frames. Um, but yeah, especially for candlestick patterns, it doesn't really matter which time frames you use. Just yeah, those are just the ones that we normally like to use. Would be 4 hours daily, 1 hour. Yeah, but the lowest we will go is 30 minutes. Okay, it will probably be easier for you to catch these reversals for candlestick patterns on a shorter time frame as well, because patterns on the shorter time frame, so like your 30-minute and 1 hour charts, can kind of provide you multiple trading opportunities throughout the day if you are looking at intraday trading. So those might be better for candlestick patterns. Okay, so now let's look at combining candlestick patterns with what we already know. Okay, we're going to start off with support and resistance, followed by our trend lines, oscillator indicators, and momentum indicators. Okay, let's get started. So, again, if you guys have any other questions, feel free to let me know in the chat. Okay, so support and resistance is basically the price at which an asset's price tends to stop falling, which would be your support level, or start rising, which would be your resistance. So you would identify these levels using technical analysis tools such as your trend lines, moving averages, and chart patterns. And these would be your swing highs or your swing lows. Okay, so here's an example. This is just a really quick recap on your support and resistance so that we can kind of go through how to identify these levels with your candlestick patterns. Okay, so here in this chart, I have drawn out our swing highs and lows for you to look out for. The swing low would of course be your first support, and your first resistance is basically the level that is closer, the swing high that's closer to where price is currently at. Okay, next. So here's an example of an insignificant swing. So these levels are bad to use for your for Fibonacci points. Here we're talking about Fibonacci, but they are bad to use for any kind of resistance or support levels that you're looking at. Okay. Yeah, here's another example of insignificant swings. Okay, so you can see there aren't really any clear patterns here. No real swing highs or swing lows. Okay, and here is an example of significant swings. So there is a very clear move up and down with obvious peaks and troughs and a very clear market movement. So these are really good levels to use for your support and resistance. And they're easier to spot for your candlestick patterns as well. Okay, someone asked, what's the need of learning candlestick types and what roles do they play in trading? So they actually play a pretty significant role. Firstly, would be each candlestick kind of encapsulates a lot of information about the price action within a given time period. So like we went through at the start about the anatomy of your candlestick, it includes the opening, the closing prices, the high and the low. So it tells you what the sentiment of the market is as well. So for example, a long bullish candlestick would suggest a strong buying interest, while a long bearish candlestick would then suggest stronger selling interest. So that would probably be more useful on your shorter time frame. Again, most of these, I can't tell you whether it's useful for you as a trader, because everybody has different strategies and trading techniques. But yeah, it is still important to know the different patterns. Okay, because like we went through the different types of candlestick patterns or the top ones to use, those can help you to identify the beginning or the continuation or reversal, so on and so forth, or the ending of trends, example. So I think just now we went through a bullish engulfing pattern. So that would indicate the end of a downtrend and it might indicate a reversal to an uptrend. So that allows you to predict future price movements based on your historical data as well. Okay, so yeah, so all of the webinars that we have, like, and all of the tools and strategies that we give you might not be applicable for you personally as a trader, but it helps to have multiple tools so that you can confirm your indicators, by using your trend lines, all of these support and resistance levels as well. It just basically helps to confirm your analysis. Oh, and another important thing would probably be that the candlestick patterns can help you to determine your optimal entry and exit points as well. So that's why we're going through this resistance and support recap as well. So that because resistance and support levels are often really good levels to use for your entry and exit points. So these candlestick patterns further help you to determine even better points as well, especially if on these support and resistance levels, you can spot a candlestick pattern there. Then it further confirms your analysis. Okay, we have another question. Let me see. On a bearish setup, is there any white soldier candlestick which will indicate that there's possibility for support breakout? Um, the three white soldiers typically refers to a bullish setup. On a bearish, in the bearish context, okay, maybe let's go back to my slides. I can't really remember the patterns off the top of my head as well. Um, yeah, so for bearish, we would be looking at the three black crows for a bearish setup. Okay, I hope that answers your question. So these are just basically three consecutive long-bodied bearish candlesticks with progressively lower closes, indicating a stronger bearish sentiment. Okay, so the opposite of a three white soldier candlestick pattern. Okay, so for example, once you're able to spot this pattern, you might want to use your momentum indicators like your RSI or MACD, for example, which show you if they show you a bearish divergence or moving into oversold territory, that can signal weakening bullish momentum and potential for a support breakout. Okay, okay. Let me get back to my slides. But yeah, let me know if you guys have any other questions. So here's an example of significant swings. Very clear market movement here. And support and resistance. So these levels, as I mentioned earlier, are used as your take profit, stop loss levels, entry, exit, so on and so forth. But an important thing to note is to make sure that your swing highs and lows, there are multiple swing highs and lows that line up together so that it strengthens your entry and exit levels. Okay, so there are at least two swing high or low levels that line up nicely. It's a much better level to use. So that's why we want to try and find levels where these might line up. So it doesn't have to be exactly at the same level as long as it's near, that's good enough. Okay. So let's look at how to pick your starting point for your support and resistance and your entry exit levels. So when picking the starting point of pivot, entry, support, resistance levels, there are a couple of rules. Firstly is to check if there's a swing high or low, pullback or overlap level to start from. Next is to go back as far as possible without intersecting too many bodies of candlesticks. Okay, so we have some swing highs here, where the price, or rather where the resistance level cuts the wick of the candlesticks. That's fine. Over here, it's kind of cutting the bodies a little bit, so that's not too preferred, but that's fine as well. So some more examples here. Okay, you can see when it cuts through nicely just one body of the candlestick, that's fine. This is something that we want to avoid because it's cutting too many bodies of candlesticks. Okay, we just want clean cuts of just the wick. Okay, here's another example. Take note of this red highlighted area because we want to avoid intersecting so many candlesticks. Okay. Okay, now let's look at the pullback and the overlap. So I did kind of mention the overlap earlier, but a pullback support is basically before an overlap occurs. So it's a strong level of support and resistance, and it breaks out from the previous resistance level, and price is now dropping back to visit it again. So when a pullback support level lines up with a Fibonacci level, it's very powerful. And these levels are also made powerful when you are able to spot a candlestick pattern as well. So this works well when it breaks a significant swing low and then starts pulling back to it. It's even better if there are multiple Fibonacci levels that line up with it. Okay, so now let's look at the pullback resistance. We have some swing lows here. Okay, we have three swing lows here, and price is breaking below the swing lows, and we're looking at it, we're expecting it to hit towards that same level and reverse off of it. Okay, that's exactly what a pullback resistance is. Now for pullback support, we're looking at a resistance. So here we have three swing highs, making it a pretty strong resistance level. And then price has broken out of the swing high resistance. Okay, so it's broken out of it, surpassed it, and now we're expecting it to reverse back to that same level. Okay. Okay, I'm just gonna. Okay, so now let's combine our pullback and overlap levels. Okay, I already mentioned the pullback support earlier, so let's talk about our overlap levels now. So an overlap level, like I mentioned earlier, is basically when price comes back to it like this, um, and it actually reverses off of it. So when we have a swing high and a swing low that line up nicely, that's an overlap. Okay, so here we have a big swing high resistance here. the moment price surpasses the swing high resistance, it becomes a pullback support. Okay, and once we see price pullback to that pullback support level and bounces off of it perfectly, that then becomes an overlap support. Okay, here's another example. We have a couple of swing highs here. Okay, and price breaks out of the swing high resistance and pulls back to it. So once price breaks out of it, it becomes a pullback support. Once price pulls back to it and bounces off of it, then it becomes an overlap level. And once price bounces off of it again, it now becomes an overlap support. Okay. Okay, another example. So here there are multiple swing lows in line at the 33420 level. And once price breaks this level, it then becomes a pullback resistance. We can see price has tested this level 3 times, making it a strong overlap resistance level. And we can see price surpass this level again to become a pullback support. Lastly, it tested this level and bounced off of it, becoming an overlap support. Okay, so now let's combine all of these with our trend lines and price action. So here's what a trend line is. Just to recap, as it's a valid trend line if there are at least 3 touches on it. So we have one swing high, two swing high, and actually four swing highs here. Okay. Here we have price moving within an ascending trend channel with multiple swing highs again and swing lows. So what makes it a valid trend channel is if there are 2 touches, minimum 2 touches on top. Here, of course, we have 3. And at the bottom we also have 3, but at least 2 touches on top and below, that's good enough. Okay. So here we have price moving below or bouncing off our Ichimoku cloud. And here we have a swing low support, price breaking out of it, and we are expecting price to continue to bounce off of it. Okay. Okay, are there any other questions? Okay, if not, there was a question about the which I think there was a question about the time frame. So let's briefly go through that as well. Okay. I just wanted to talk about which time frame to use. Just really quickly. So here's an example of price. You can see it's um kind of messy. There isn't really a very clear market structure. And this is on our M15 chart. Okay, now if we change that and we look at it on an H1 view, the exact same chart, just on a different time frame, you can see the market structure is a lot clearer. Okay, so the thing to learn here is that at the very basics, the clearer the swing low and the clearer the swing high, the clearer the trend between these 2 points, the more accurate your analysis will be. Okay, so it doesn't really matter which time frame you use because that's very dependent on your own lifestyle and your own trading methods. But yeah, as long as you make sure that your market structure is clear, that's fine. Okay, so yeah, so typically traders will choose at least 2 time frames, such as your short-term time frame and longer-term time frame. So like I mentioned, we don't go below 15 minutes because it's kind of how can I set YouTube? Okay. So let me get into that in a bit. But basically we don't go below 15 minutes because the charts tend to be a little bit too messy on those time frames. So your short-term time frame is used to identify the most recent trends and price movements, which is why again just now I mentioned that we if you look at your price action, so like your candlestick patterns, those tend to work better on shorter time frames. So like your 30-minute and 1 hour time frames, maybe even 4 hours. Okay, but your longer term time frames will be used to identify the overall trend and market direction. And again, we will use all of those together with key support and resistance levels, trends, patterns, indicators. Okay, so what we look out for on the higher time frames will be key graphical levels. This horizontal levels that we're talking about are those that we just went through. So your support, resistance, pullbacks, overlaps, all of those. Trend lines, trend channels that we also just went through. Some breakouts, big moving averages. These big moving averages and Ichimoku, those are your indicators that you would use after doing all of this technical analysis. Big Fibonacci levels, those are those we cover more in depth in our Fibonacci series. And lastly would be your price action, especially the prior bar. So this is what we're talking about today, what I was talking about with the candlesticks and all of that. Okay, let me just answer some of the questions now. Um, okay, I can show you how to set up Ichimoku in a little bit. What is a 3 super trend indicator? And does it work on MT4? So the super trend indicator strategy, this kind of um not really related to today's topic, but it's basically it follows the trend, obviously, and it's based on the ATR and closing price. So ATR is your average true range, and it helps to determine the trend of the market. So of course, there's an uptrend when the price is above your super trend line, and downtrend when the price is below the super trend line. Does it work on MT4? I'm not super sure. I don't think the mobile app supports custom indicators like that. But I'm not too sure. Maybe it works on the desktop instead. Um, yeah, maybe you can check on that. Because I don't think, because I think super trend indicators are custom indicator, and your MT4 mobile app cannot set up custom indicators, if I remember correctly. Okay, setting up Ichimoku on your phone or laptop. I can show you how to do it on TradingView. Let me just open my TradingView. Okay, so if this is just a random chart that I have open, if you click on these indicators, and search up Ichimoku Cloud, okay, yeah, it show up like that. It might not show up like this actually. Let me, okay. So this is your Ichimoku Cloud. Okay, and basically you just click on indicators, search up Ichimoku, and this is what it'll look like. click on settings, and there's actually a lot of different lines when it comes to Ichimoku. I'm not going to go through in depth what they each represent now, but I'll tell you that we normally just look at the cloud. Okay, so we normally just look at the plot's background. If price is moving above the cloud, it's a bullish signal. If price is moving below the cloud, it's a bearish signal. So that's one of the quickest ways to use Ichimoku. Yeah, so this is on TradingView, if which you can use on your phone or laptop as well. So for Fibonacci, which I didn't really have time to talk about in depth today, but I did kind of mention it in our price action. So you can take a look at this website. Um it's a free website to use. It's just the forexarmy.com. You can look at some free videos that we have on YouTube on retracements, extensions, some guidelines. Yeah, so what are the different levels that we use, how to use them, how to draw it so that it's valid, how to avoid invalid levels, negative levels as well. Because we use 4 different techniques when it comes to Fibonacci. So stay tuned for our Fibonacci webinar series. It's a 4-part series, and we go really in depth into each of the Fibonacci techniques as well as different examples. But in the meantime, you can take a look at this as well, in case you were curious, since I did mention them a couple of times in today's webinar. Yeah, I think that's it for today. Um, yeah, let me know if you guys have any other questions. If not, that's all for today's session. Thank you guys so much for joining me. I hope you guys found this session helpful, and I'll see you guys again next week. Thanks, everyone. Bye.